Hi, welcome to another episode of Community Living. So this is a series whereby we'll be covering the glossary related to finance. So all the financial jargon that's out there, what it means, and actually where do you use all this financial jargon and how relevant is it to anything that you're doing. So today I'll be covering a TFSA account, right? TFSA stands for tax-free savings account. So a tax-free savings account is basically an account that was created by the government so that more and more people can save and enjoy the savings tax-free, right? So as we all know, savings accounts are more secured as compared to other investment products. You can get a tax-free savings account from most of the financial institutions, meaning your bank, your investment firms. You can get it from places, more unconventional platforms like Easy Equity, which is a financial service provider as well. So that's where you can get your tax-free savings account, right? So basically, the tax-free savings account has certain criteria or has certain rules as to how do you operate, how do you maximize your profits or gains or returns on the tax-free savings account, right? So the first thing being that in a year you're only allowed to save up to 33,000 each year. So if you save anything more than 33,000, it will be taxed. Like normally, I think it's 40% of the amount that's above 33,000 will be taxed. So you have to make sure that in the financial year you save a maximum amount of 33,000. Another rule or another requirement is that you can't save more than 500,000 in a lifetime. So you must ensure that you don't take out the money because, you know, with the compounding interest, your interest basically makes more interest on your behalf. So let's say you save 33,000 this year and you take out 10,000. So it means in your lifetime you're left with 490,000 because it's the money that you put down. They're not looking at the interest or anything of that sort. So you've taken potential interest-bearing funds from yourself when you take out that money, because just because you took out 10,000, they're not going to look at it like you would have received 10,000 rands worth of interest, so that's fine. You're taking it from that principal amount of 500,000 that you've put into your account. So that's also another thing. And so the different ways in which a tax-free savings account usually works is that for banks, they have their own way, like they will have various ways of saving that amount because it usually has a very high interest rate compared to other savings account because of how the bank can utilize the money on your funds. But with financial institutions like banks, your money, there is more risk is at a place where it's more risk adverse than if it's on a financial service provider like Easy Equities, right? So on Easy Equities, they don't have a set interest rate for you where they're saying, okay, our tax-free savings account will yield, will give you an interest of 8% on a yearly basis. So what they're using is that you can buy ETFs, and whatever those ETFs will yield will be basically the interest for that year. I think because they understand how equities and ETFs work. So I call an ETF a share of a share, but I'll make another episode where I go a bit more in depth in terms of ETFs. So I'm not covering that in this episode. As I've said, this is specifically to understand what a tax-free savings account is. So on the Easy Equity platform, you'll buy ETFs, and those ETFs, like whatever interest or profit or gain or return that you get from them will be basically the interest that you gain on your tax-free savings account. So you're not allowed to buy equities in terms of on the tax-free savings account. You're only allowed to buy ETFs. So yes, then that will be how you gain money for your tax-free savings account. And then I think that's basically it when it comes to tax-free savings account. If you have any other question, or if you have a comment, or if you're currently on a tax-free savings account, please comment down below to say how your experience has been with a tax-free savings account. I haven't been using one as of yet. To be honest, my journey with investment products and investment vehicles have only been with equities so far, but I do understand how ETFs and tax-free savings account work. Hence, I'm making this video so that I can explain how it works, and also just to find out from others how it has been working for them, and if they're going to continue with the journey of saving 33,000 rand per month, per year, and if they've been able to be consistent in their journey of saving that amount. I think maximum per month that you can, if you're trying to maximize on that 33,000, is about 2.5, 2.7, somewhere there. So please just comment down below if you are using it, and just give us your experience on the product. So thank you for joining us. Bye.